niggas on your neck, bet they on your neck. You want that watch, you better rock a tech. You want the chain, you better cop a vest. You want the check, but can you make it stretch?
Welcome to Root Zones, bring you the good news and the bad news of crypto. My name is Wayne, and if you like money and crypto, make sure to hit the subscribe button. So, today guys, crazy times. So today Bitcoin of course have crashed to 42,000, right? And there's two factors. Let me just share my screen. Don't know whether this would be fitting. Let's see. So anyway, Bitcoin crashes, two factors driving to the next brutal crypto winter. Now at the end of the trading day, the US Bitcoin have shaved off over 6% of its value to reveal a new price of 43,200 in its closing price. Now the value declined and created a short wave of selling frenzy and what left of their gains before further slipping, fizzling out all the liquidity. Now with Bitcoin at 42,900 according to CoinMarketCap, selling activities appears to have persisted for most people around the world since waking up to the news of a looming crypto winter. Now, of course, there's a combination of external factors is the driver of this round and decline. The experts believe here are some of them, right? The US Feds, of course, plan to hike interest rates, following the rising US inflation rate now soaring over 120% above the speculated target. The US Feds is looking to combat the dollar value loss with an increased interest rates. Now, in the release minutes in December meeting, the US Fed disclosed it would ramp up borrowing rates during the first quarter of the year to discourage excessive borrowing. Now, part of its plan also includes a projected pull plug on its long-term bonds and security holdings. Now, the volume of the shares valued at 8.8 trillion will see much of its diffused into the markets in the coming weeks to help combat inflation. Now, implication, of course, not only in the crypto space but also in the stock market, and this cutback on investments due to the high cost of assessing credit. Second factor is also the protest in Kazakhstan halts the Bitcoin mining. Now, a protest near the city of Nur Sultan has seen hundreds of the people take to the streets, based on the growing energy shortage. Now, this concerns center is based on the growing number of the crypto mining facilities that is happening in the nation and is rising energy consumption and adverse effects on the people. Protesters, of course, have seen to force telecommunication providers to cut back on internet supplies targeting minings in the region, according to BTC.com. Now, as neighboring nation to China and Kazakhstan became the second best destination for miners, healing the US on the back of a hardline crypto ban by the Chinese government last year. Now, in a similar vein, government of Kosovo has issued a ban on all crypto mining activities. A Balkan nation has acted on the concerns of many of its citizens, lamenting power shortages because of an influx of miners, especially Kazakhstan and Kosovo have cheaper costs of electricity. So, of course, going forward, the trend with the blow of Bitcoin has suffered with a rising regulatory scrutiny from the US, coincided with the China's decision to back out cryptocurrencies, and echoes of the energy consuming nature of mining activities gain mainstream audience, and the results value decline, and it's really tough, and at this point of time looks hopeless for Bitcoin. Second to that, Ethereum also plunges 13% down, more than Bitcoin, after the Fed, as we know, spooks the crypto market. You can actually see the Federal Committee in favor of the short-term rates actually created that dip, making it much more cheaper if you are actually doing dollar cost average and shedding almost close to 13%. So of course, if you were holders of Ethereum, you will be taking close to 13% hit. But if you are actually never got into Ethereum, now is a good time to do dollar cost average to buy the dips. And of course, if you have any questions, you can just ask me on how to actually buy the dips. I'll be happy to share that. But we will be seeing some rebound levels. I don't know whether now it's a bit shaky. We do not know how far the Feds would actually go with actually raising the interest rates and how much, right? And that could have a very adverse effect on the borrowing. It might slow down the economy, but it's also to prevent a pop, right? As we know, in terms of market crashes, it takes about within 3 cycles of market crash in every 10 years. Of course, that rate has now been extended. We have always been anticipating this market crash to happen, not in the crypto space, but of course in the paper, right, the US stock market. But they have managed to somehow inflate and give lesser interest rates so that people borrow money, and you can actually see that happening on the company's books in terms of their PE ratio. Most of these companies in the US, especially on the listed stock exchange, have actually increased in their PE ratio, and the median, of course, is almost more than the 2 times. Take Tesla, for example. So this was the first video that Woodzones have actually created. You can actually go there and check it out. It was 7 months ago. It was the first video that I've done, and it still holds true. It covers a lot of things, a bit about the economy, the printing of money, the $1 trillion debt, and all these are driven by data. This is not conspiracy theory or any speculations. It's straight off from their own government websites, and you can actually have a look and understand how we are actually looming towards an actual market crash. And of course, that could potentially be one of the biggest wealth transfer in human history. And if you look at any market crash, guys, if you actually study market cycles, debt to ratio, the printing of fiat dollars, you see that we always, as a global community, right, we have always broke the all-time high, right? So with any market crash since the early 19th, when in the US stock market, where they had Black Friday, we have always risen. So when something like this happen, don't panic. We can always there will always be ups and downs, but I still anticipate that this is not a full crash. It's just a few percentage. So I cover a lot on the definition, so do check that out. Now, looking at the fear and greed index, of course, now it is extreme fear, and it's been for weeks. Later we'll cover on the charts. You can actually see over the last 1 year ago, right, we had, or if I go to the max, we had the C19 that started, and then we had all these roller coaster rides, the ups, the downs. This was, I think, always pointing to Elon Musk when he had that tweet on Twitter, and then we had a very long period of time before we saw a very nice all-time high, broke the all-time high. Bitcoin broke the all-time high, and right now we are back again down, but not as down as previously, where we were at the 29,000 in terms of Bitcoin. Right now, the US stock market, of course, for the VIX, we are at 19, which is still okay. This was, of course, will always be there. It made one of the highest history of fear, where even oil prices was at its negative. So looking at the heat map, you can see across the board, it is a bloodbath, guys. So we have about minus 7%, between 7 to about 15% for some of the tokens, right? So great time to actually, again, do dollar cost average, because that's when you expand your holdings, your positions of your tokens, and you actually hedge against if you actually went in at a very high price for some of the tokens. So in the last 24 hours, of course, cryptocurrencies right now we have is about 16,400 over exchanges, and we got about $200 billion wiped out from the market. Today, we are roughly doing at about $2 trillion. Bitcoin and Ethereum, of course, take 60% of market dominance. So top 3 trending coins may not be top in terms of bullish. Negative is Lucid, Lens, Ever, BNB, and Meta Football. Now, last 24 hours, Bitcoin is down by 6.72, Ethereum down by 10.29, BNB down by 8.44, Solana down by 10.91, Cardano down by 6.99, XRP down by 7.93, Terra Luna down by 10.10, Polkadot still in the top 10, down by 12.82. So if you have great projects that you've been eyeing, right, this is the best time actually to get on it. Like, you know, we have Flux, right, we have Terra Luna. So these are kind of coins that generates passive income. Anything that has passivity, that those are great opportunities that you can capitalize on it. And then look at Avalanche, guys. Avalanche, right, $94. So try to look at those coins that can actually generate passive, because at least you are not just looking at capital appreciation. Now looking over at the charts, I was always tracking this, you know, it's on a day chart. If you look at the height of where Bitcoin was and where we actually broke, this took at least about close to 188 days for recovery. So every time we had a dip, we found that it was actually longer to actually recover to break its all-time high, right? So it's about 188 to about 190 days. Now, this dip actually broke the support level, which was at 46,000, and today it's at 42. So it seems like we are actually getting supported at 42,000. But if we break, guys, if we break, it will be a 30% drop, and we would actually be back at the 30,000 levels, which I hope we don't. So let's see what's going to happen, because this 29 was sometime in, I think, somewhere in April last year, right? And this alone took close to maybe about 60-70 days, right? So we had a very low period. And I always remembered when we were doing this, it was a terrible time, because we at this junction we were already doing a lot of trading in terms of buy and sell. We were also hodlers, right, holding coins, and nothing to do with passive income. And when the market actually started to pick up, what we found is that, you know, we always talk in the crypto space, buy the dips, but the question is, how deep can you buy? We don't have deep pockets, so every time there's a dip, you may not know where is the bottom, you may not know where is the top. I mean, of course, we use Bollinger, you know, we use a lot of support and resistance, understanding where the market flow is go. We never trade against the market. If it's in the bear market, then what we do is we find a nice percentage, maybe using the Fibonacci, and at every checkpoint, if it hits, we will go in with a specific amount of money. So we don't go in all at once. If you have like $1,000, you might break that up into 5 different entries, and then as it hits those trigger points, we go in and purchase the coins. So when it gets to the run up, I mean, if of course you have to believe in a project, you have to know that the project has an actual roadmap, it has a future, and that's where you do dollar cost average. So when it ever breaks its all-time high, you can almost get a sense of how much you would actually make over the top. And that's where you know, most likely always, as a first principle, we always take out our principal, and then we will look at ways to actually reinvest that in another project. So it's a constant rinse and repeat in the crypto space. We never stay stagnant. We always hedge the risk by buying great projects, both in terms of cap appreciation as well as generating revenue. So after going through this path, we start to realize that now root zones for 2022, our focus will be more of passive income, mostly in the DeFi space. So I think if you guys have been following us, you would already got into some of these projects, and now right now in the bear market, we are able to actually capitalize using that cash flow without using our own money, but just money produced in the crypto space to buy those coins at a very discounted price, right? So that's all I have today, guys. Manish is not here today. He is not well, right? So he's down with the flu. We'll see you in our Telegram group. And if you have any further questions, please let me know. Take care, guys.
Diamonds on your neck, bet they on your neck. You want that watch, you better rock it tech. You want the chain, you better cop a vest. You want the check, but can you make it stretch?